All right, hey everyone, it's John again with FMS. I'm here today with Adam Mesh. A lot of you probably know Adam. Adam has built a great business over the years. The Adam Mesh Trading Group. He's been around at lots of events. He's bought media from a lot of you guys, been an affiliate back and forth. So, hey Adam, appreciate you coming and talking today.
Thanks, John. I watch all your interviews, so I'm excited to be a guest on a show I watch.
On a show, I feel like such a celebrity. Thank you for that. No, man, you've been how long have you been in publishing?
Since 2006.
2006, man. Yeah. So you've been at this for quite a while. You've seen a ton of changes in the industry.
Yeah.
And the reason I wanted to get you on here today was because you have recently exited and joined up with Financial Answers and Tiffin and Ian Rosen, who we interviewed recently. But before that, 2006, man, that's you went from how would you describe that change in the industry then from 06 to now? Because I don't talk to a lot of people who've been in the industry as long as I have. So that's really cool.
Yeah, when I first got in, it was new to have orders on your phone. That's what allured me to the industry to begin with. The idea that you could be making sales and check out the orders coming in on your phone. So I've been trading since the 90s. And when I got into the business, I was the first financial publisher to advertise on Newsmax. And the first ad I ran, they accidentally blasted it to the whole list. And I made double the cost of the buy. So I was hooked on media buying since 2006. And the funny story is, you know who was there then? Aaron DeHoog was there in 2006. And they reached out and they let me know softly that they were going to get into the financial publishing business. And I was like, but I was spending a lot of money with them. I'm like, what do you mean? You're going to compete with me? They're like, we are, but we're going to make it up to you. I was like, how are you going to make it up to me? They're like, we have a really good copywriter and we're going to introduce you to him and you could use him too. And that was Jed Canty.
I was going to say that had to be Jed.
Fair deal. That ended up being a fair deal.
Yeah, fair enough. I mean, that guy's probably one of the top 2 or 3 that's ever written in the industry, ever.
I worked with him during his rookie years, which is
nice.
Cool to say.
Yeah. Oh, that's awesome. Well, how did you see? So that goes way back to Aaron's early days too. Well, how would you describe that development then over the next 10, 15 years in the industry? Because you've been seeing all the changes too. So I was kind of give my impressions, but I'd love to hear somebody else's and not just my view.
Early on, our industry was defined by Stansberry did the End of America campaign, and that kind of transcended the space because it was everywhere and it was a feature film kind of sales letter. And then Newsmax followed Stansberry with Aftershock. Mm-hmm. And at those points, I was kind of I didn't have investors. And I wasn't of the mindset that I'm going to go spend $250,000 to produce a movie that may or may not sell product. I didn't have the appetite to test at that level. So instead, I decided to do something different, which was webinars. And at the time, webinars was an original idea. And I would come on and talk about my strategy, and then people would sign up on the webinar. And that worked really well, especially when there was less competition. So that was the beginning. And I think as the industry has progressed, there's been more people that come to it, as is with anything, more ways of selling. And I think that the hardest part of it, and listen, we've all grown, we learn how to do things, we spend on a higher level. Mm-hmm. But I think the challenge of the industry has been capturing the audience's attention, because there are a lot of us out there. We're all vying for their eyes. And, not to get ahead of this conversation, but I think over the last couple of years, it hasn't just been within this industry. It used to be, if you have an appetite for risk and you want to make money without it correlating with your time, you have 2 options: real estate or the stock market. Mm-hmm. But now it's real estate, the stock market, cryptocurrencies, NFTs, baseball cards, collecting anything. So it's really spread out. And so again, that competition for the audience's attention is intense.
Yeah, it is. And you know, just to step back a little bit, like you're talking about a very pivotal period in the industry because like we like saw like with End of America, it wasn't the first VSL. But it was within that first, I think, year and a half of the VSLs. And I remember when that format change happened, like we were seeing 9-to-1 improvements on conversion rate for the first few months, and then that went way down real fast. But that format like totally changed the I'd say the barrier to entry, just like you were talking about for a lot of growth, because it was like now your promo, you had to hire the copywriter, but then now you had to do this big production. And so the webinar route, like that you kind of were right there at the beginning of, like that kind of defined two different streams in the industry,
Right.
because you had this up from then to now, that production quality has just improved and improved and improved to where like now I've even been talking to guys who spend $1 million on a launch production. But then you also have like, you know, webinars still work. There's a lot more competition for it. The format also was awesome in the beginning and had a huge bump in conversions. And that's declined, but it's still so steady because you get that live interaction.
Right. But it is interesting because I've been doing webinars for a long time, and you know, my marketing budget goes up every year, but you know, candidly, like the attendance is still the same. It's not like I went from, you know, I went up and up and up, and then I hit my numbers, which is hundreds of people. But I do, in fairness, I do webinars twice a week. So it's not like I spread them out for big events, but like I never got to the point where there were thousands of people on every webinar.
Right.
And even if I tried to spend more to get them there, it was still limited, and you kind of settled into your groove, which, you know, will take us into the next part of the conversation. But yeah.
Yeah, I mean, actually, that's where like it's an interesting transition because like you bump into like two kind of areas in my mind. One is in terms of like choke points on business in the space, and one is your ability to spend on media, and then drag out like 8 to 10 months. Like if you can't, like that's one of the kind of the advantages that Agora had for so long is they could bankroll things for a lot longer than the smaller publisher isn't going to spend $2 million and wait 8 months to see if they get their money back.
Right.
You can't like function that way. And so that like that hurdle is a big one. And then the other one is the engagement piece on the promo. And so having like so few copywriters and then so few or so much money that you would put into a production to try and break out of a webinar kind of model, or you know, it's just cost prohibitive from a cash flow perspective for a lot of publishers that are sub, you know, a large group. And so that makes what the period of time that we're in really interesting, and kind of leading into the question here of you have kind of sold some of your business, or you know, to Tiffin Financial Answers, who, for those of you who don't know, Tiffin is a fintech company. Financial Answers is one of their divisions. I did an interview with Ian Rosen, their CEO. They raised what, $100 million last year. I think on like 4 different rounds. Last valuation was 447 million.
Yes.
And backed by JP Morgan. Kathy Wood joined the board from ARC. So like, it's kind of a rock star.
She was at Apex Clearing. That's a $5 billion company. Sharon French from AIG. They got a nice lineup.
It's a rock star team, right? Like, coming in and acquiring businesses in this space. And were you the first?
I was the first.
You were the first, so you really kind of like started the trend, Adam, once again.
There we go. Yeah.
So walk me through, like, were you thinking about selling at that point, or how'd this kind of come about?
I never was thinking about selling, and that was just for fear of not having anything to do, and just seeing how life went. I planned to be in this business for life, and you know, I was moving along, doing my thing. I definitely was looking for a change. I felt like I was in a bit of a routine. And Ian is someone I had done business with when he was at StockTwits. I had bought some advertising from him. And, the story of how the deal started was it all comes from great domain names. Like, hold on to your great domain names would be my first thing, because I did like I've been a brand ambassador for TastyWorks for over 4 years, and that will come up too. And I have a really good relationship with them. And they reached out to me and said, hey, we were looking at this company. It's too small a deal for us, but you might be interested. And it was a company called Stock News. And Stock News, it was losing money at the time, but it was a great domain. And we looked at the business and we saw what their costs were and stuff. And we're like, we could turn this profitable. And it was a fun project. So I bought Stock News. So it started with a very small M&A deal. And then I teamed up with Steve Reitmeister, who had been at Zacks, and to come in, and he ran Stock News. So Ian reached out when he was looking for his first deal about buying Stock News, just because he had heard the domain and it had been for sale and he remembered it, and now I owned it. And as we started talking and he talked about what he was looking to do, I said, well, maybe there's a bigger conversation with my company. And the reason for that was because as a brand ambassador for TastyWorks for 4 years, I opened a lot of accounts for them. I had a great relationship for them. Big fan of Tom Sosnoff, the whole team. But when they sold for $1 billion, it became clear to me that my audience was worth more to other people than it was to myself. And I had been stuck in that $10 million annual revenue. And I always said, it was kind of at the point where, like, if I would have broken out to 20 or 50, it would have happened already. And whatever I tried, I would grow a little bit, but I wasn't breaking out. And I saw what I had done with TastyWorks and them selling for $1 billion. And Ian had this story that my audience is worth more to other people. And I had created a good brand and I liked my audience. And here was an opportunity to team up with a company that could get that value and also provide those benefits to my audience.
So like this issue of value capture is, to me, one of the most critical conversations in the industry right now. And so to put this into perspective for anyone who hasn't watched like my keynote on this, where like I was trying to drill this into people's head, tell me, would you mind telling me roughly like your free file size?
So courtesy of Brett Holmes, who emphasized the importance of having multiple lists on different content, combined, I reach around 1 million people every day, but it's 17 different newsletters. So
do napkin math. 1 million names by the average American.
And that's full file. That's not the rates. That's not.
I know that's full file, right? But that's roughly speaking. Then the people on that file represent about $267 billion of capital power in their savings account, not their total net worth. That's even bigger if you put it in real estate and homes. That's just based on the average, like 267,000 savings on the average American. And I bet you your file is probably skews higher than that. Right. And so when you think about that as a publisher, like you've spent years building an audience of like some of the highest quality type people, investors, who represent like hundreds of billions of dollars worth of capital. You're one of the handful of people they actually pay attention to, because I mean, any of us can only listen to like 2, 3, 4 people in their life who actually like on finances that they'll listen to. Right. And they're looking at you as one of those guys. And you're getting a subscription revenue, which is a great business, but we know that those guys are worth, like you said, like brokerages, like TastyWorks, they're getting exit values of what, like $10,000 per client, per account or something. And in some cases even more, because the quality of those guys. And usually it's because they're really good at options trading and spread trading and stuff that you're teaching them. Right. And so they go, because they're in a VC fintech world and they're actually on the transaction side, they're catching this huge amount of value. But even that value is only a fraction of the total value of that customer. Right. Because you have like the fund side, you have all these other things, and we're not getting it.
Correct.
and that's like the most important conversation I think for any of us to have right now. And the fact that you recognize it right away, I think is, great, because I think most people have been missing that for a while.
Well, it hit me over the head because I had asked TastyWorks. I had a marketing agreement with them that was, it's a good deal. It wasn't close to that, and I had said for like a year, I'm willing to forego the marketing agreement for equity. I saw the writing on the wall then, and they're like, maybe. And when they did the deal in a nice way, Kristi, who's the president, reached out to me and she's like, I'm sorry. She's like, we were already in the talks. I know you wanted it. We couldn't do it. And it was just, it was I was happy for them, but it was frustrating because I was a part of them since the very beginning. And I was like, I was wearing TastyWorks hats and really loving the product.
Yeah.
But to see the $1 billion deal from a company that you knew about since day one and we're helping grow, and then so Ian in that 2-week window reached out to me right after they sold, and I was like, yeah. So it was the timing of I wasn't looking to sell, and in those 2 weeks I was like, I need to do something. And Tiffin and Financial Answers, it's kind of like this, right? In baseball, there's some teams that, for the most part, won't be able to compete for a World Series just because they don't have the same salary cap. So maybe I'm not the Marlins, but I'm not a high level team. And this for me was like signing with the Yankees, and you have all these all-stars around you and all these tools.
Yeah, and so like when you think about the tools that are available and kind of some of the stuff that's there, what do you think is the most exciting to you?
So in terms of Financial Answers?
Yeah. What's the most exciting, like on the maybe break it down into like short term and long term? What's the most exciting kind of things that you think that
so in terms of fintech, like Magnify is a sister company now, and that's a platform that's like the Google for finance. And I keep watching it develop, and I see how people are going to be able to use that to kind of cut out the middleman and invest for themselves and search different funds and stuff like that. And what's so cool about that is they don't make money from the users. They make money from the funds. So someone like ARK would pay to be a sponsored search on Magnify, and they can make millions and millions of dollars through these funds that are paying. And it's kind of like, if you think about the way of video games right now, the future of video games is kids are going to get paid to play video games. That's how it's going to be. You're going to have kids that are literally playing games to earn money. Just the same thing with NFTs. And that's the model where you're the attention, they're paying for your attention. They're paying for your attention. And so Magnify does that. They're going to make money through the funds. So the trading there would be free, right? To have a membership and access and use the site is all free, but it's worth a lot to them. Right. So for me to be able to introduce that to my audience, and everything about that experience is free, is pretty cool because I'm giving them a lot more. Yeah. They're benefiting, I benefit, everybody wins.
Yeah, no, I think that's awesome. Like the model part, the change in revenue model, the change in opportunity. Like for me, that's always been something that it's exciting because it changes the value of the customer, which then changes the acquisition math, which then changes everything about the ability to scale. At this stage, and I know it's still relatively early in the process, are you seeing like a kind of a change in the value of the customer yet, or is it way too early? Because I know it is pretty early, so you probably haven't looked at like.
No, in January, so April is when my deal got done, okay. And they've bought other companies since then, as you know. And in January, the focus has been on synergies between the companies, and I'm seeing revenue from some of the other Tiffin companies now, and there's a lot of them. Which is another point. Like for me, as a smaller brand, if I introduce customers to the first, second, third, fourth, fifth, sixth product, seventh, I'm out of things to sell. I have a strong brand, but they've bought enough from me.
Right.
So if I could introduce them to other products that are sister companies of mine, and I could benefit from that, and they benefit, that was a big appeal to me. Like, I And I'm not reinventing my existing products. I don't really like change the name that often to sell the same thing in a different name. So, you know, I like having new ideas that if I'm a fan of, I can introduce them to them.
Right. And so now you've got like this bigger ecosystem that you're able to participate in. You have new opportunities that like you would never have your own broker dealer as a small publisher. Like but you have access to that as a sister company. You have access to 9 to 5. You have all these things now. What's this experience like running the business though? Like, because you know a lot of times people get acquired or they partner up, and it's like we say all these things, and then you know reality is never quite the same. You have to work within a new culture. Like going from being an entrepreneur that you were the boss, you did whatever the hell you wanted, when you wanted it, how you wanted it, and now you're working in a pretty rock star team fintech company. Like they're a startup too, so I know it's got to be very entrepreneurial, I'm assuming, but it's got to be a shift for you.
100%. I literally, after my first job out of college, I was trading, and I started a trading company like when I was 22. So I've been an entrepreneur my whole life, and that was a daunting task to become a part of something else, and all of a sudden have meetings populate in your calendar that you didn't set, but you have to show up for, because that never happened to me before. And that is a switch. I will say I was most nervous about that. Ian is someone, and you've spoken with him, and you've probably seen this already, from the first phone call we had till now, he's literally done everything he's ever said. And when he said, like, you know, as complete, like, and I learned a little bit how to be, I'm an emotional guy, so I learned how to be more professional from him. He is always cool-headed, and he listens to me. Like, I feel like a leader within the company. I was in early on, and I definitely have a voice. So, you know, it was choosing the right partner. But I could see a scenario where that could have gone very bad if I ended up with the wrong people.
Yeah, I mean, I know other people, not related to Tiffany, but other people who've been acquired over the years and have been ended up being pushed out of their own business, and so like that's definitely like one of those concerns that I think, you know, it's a hard shift to make mentally, but I think, like, I know Ian's another entrepreneur, founder, so you're working with entrepreneurs. I think that probably makes it a lot better, is like they get who you are, right?
Well, when we were doing the original deal, they moved really quick. We were on the call. It was like our second Zoom call, and we haven't even mentioned Vinay yet. And Vinay is the man at the top of everything, who's just purely brilliant, and one of the few people I've spoken to, men, in my life, that has me off balance when I'm in a room with him, because he's a really powerful, smart figure. And we're on the Zoom call, and he's like, well, why don't you come to Boulder? And I was like, yeah, sounds good. He's like, come tomorrow. And I was like, tomorrow? And he's like, yeah. I'm like, well, let me just check with my wife. And he's like, all right, go ahead. And there was like a pause. I'm like, you want me to like stand up and go ask her? He's like, yeah. And so like I left the Zoom, and I was like, yes, can I go to Boulder tomorrow? She's like, yeah. And so I went to Boulder right away, and they had me meet the team there, and everyone there at the senior level had owned a company before. They were all entrepreneurs, which was really cool. And also I do have skin in the game. And as we see more companies acquired, and now we've made deals with companies for equity. And so it's trading at a certain price. And so I've seen what I started at and what it's worth now. And that's, like, as Ian says, everything I did was always organically grown. This is inorganic, so it goes a lot faster, which is really cool.
Yeah, and so I guess that's kind of that's got to be one of the big upsides for you, is the opportunity to like participate in like a company that all of a sudden is exponentially growing in value. Your equity piece is just, you're watching that number go up. And I'd imagine, considering how much like money is in fintech, and like the pace of the large scale acquisitions and IPO, everything else, that like I would imagine that there's got to be on like, and obviously it's too early to predict, but there's got to be a big liquidity event somewhere here on the horizon. Probably not 5 years out, probably a lot less than that.
And that's that, I listened to a podcast by Dave Portnoy, the guy from Barstool.
Yeah.
He's being interviewed by Bethany Frankel, who did the Skinny Girl brands. And it was really interesting because he did 2 deals. His first deal was a private equity company came and bought into him. And then the second deal was with Penn Gaming. And he said the first deal took care of me. The second deal took care of everyone. And they're already setting it up where people on my team are going to have options in the company, and they're expanding it out. And the fact that I have a lot of people who've worked with me for over 10 years. And so the fact that I could help them win too now, and I'm working for that plus another equity event. The one thing that didn't happen was I sold and I was like, rode off into the sunset. This is the hardest I've ever worked, and I feel like the most pressure I've ever felt because the stakes are high. Right.
But that's I mean, for the longest time, like, I mean, set financial publishing aside, but just take like the digital entrepreneur. Like, most of us have basically been over here in kind of an operator role. Like, we built something and we love it and we're doing it. And then over here, you have the VC world. Like, we're bootstrapped by and large. Over there, people are getting funded and they're building things and they're getting these huge exits and valuations, often without ever figuring out how to acquire a customer in any real way, which is kind of crazy to me. And I've seen that. I've seen people raise $50 million before they ever figured out how to make a customer work, acquisition campaign work in any real way. And the period in the industry that we're at, I feel like this is extraordinarily true in FinPub, but I think it's true in the broader digital entrepreneur market across sectors. Is you have operators like you, like me, like people who have built businesses, who now have an opportunity to kind of step sideways in to this VC market, in our case, the fintech market, at the peer. Like, this is the most money in private markets in the history of markets.
Not even close.
And pretty much, but like in fintech is one of the hottest parts of it, right? Like, it's massive amounts of money sloshing around.
And to your credit, John, I remember you writing about this over a year before my deal ever happened. You said change is coming to our industry, M&A is coming, money's coming. You remember? You could find the article.
Yeah.
You wrote about it a year in advance. And so I saw your articles now, and I'm like, this was a year later. I'm like, you called that a year ago too. And I read it and I was like, okay. But you're right. The skill set that the people in our industry, we've been competing against each other in a healthy, good way for so long to really convert. And we understand ROI. We understand how to be profitable, how to take what we're paying and turn it into a profit by the end of the year. Or if you're in Agora, maybe a little longer, depending on what it is.
Yeah.
But we've been trained to monetize. A lot of these companies have not. So if you take our skill set and add it to these companies, it is that situation where everyone's winning. But again, that skill set and the way we're monetizing it, we're not maximizing those dollars on our own. Right. It's finite, and the world becomes a lot bigger as you expand into other parts of fintech.
Yeah, and I like the way that Ian said it, and I have a lot of respect for his view on the industry. I mean, largely because it coincides with mine, so he's got to be smart right now. But
agreement, right? That's what you guys.
Yeah, say. Exactly. But no, but I mean, because like, he's got, not only has he built a successful, founded a successful company with Even. I mean, he was GM of MarketWatch and CEO of StockTwits, and so his view on the financial media space, like, that's the kind of guy that I'm always very, very interested to get their perspective on. And for him to be at such a juncture in his career where he's got all this experience on the backside, he's part of a really hot fintech, and to come out right up and say, like, the stuff that we're doing in the media publishing space is the hardest part of building a fintech company, and it's the thing that most of these VCs driven companies don't know how to do. Like, that puts that value capture issue in stark reality, where, wait, if this is the hardest thing to be able to acquire customers, engage them, and get them to put money down on stuff. And these guys are getting hundreds of millions of dollars in capital and billion-dollar exits, and we get a little bit of advertising money from it. Like there's a disconnect that if we don't as an industry start to really start to think about it. Like I've been saying, I said this a year and a half ago, so the clock's ticking. I think we had 3 to 5 years is what I said, before the opportunity passes us by as an industry, because everybody else is going to come in there to figure it out. They're going to acquire. And so like, this is the time, like this is the moment that people need to start acting and trying to figure out where they fit in this ecosystem. And that's why I was so excited to see like your deal with Tiffin and talk to Ian about what they're doing, because I feel like it is kind of a perfect setup for publishers in the space to actually start to make that transition. How do you go from, well, I'm a publisher, I've reached, like you said, like I'm not breaking out past this, it would have happened by now. How do I pivot and enter a different game where I can win because I'm on a better team?
Yeah, 100%. And it seems like the players in our industry are like, it's like we were all coordinators on a good franchise, and we come from a good lineage, and you can see all these coordinators be a part of these big franchises now, because right, whoever's able to be profitable in this industry has a unique skill set that's more valuable to someone else. Yeah.
And then on the flip side, I feel like it's going to get a lot harder to compete against people like you guys, for clicks, for attention. We had one big 800-pound gorilla in the room for years, and that was the Agora ecosystem. All of a sudden now it's going to be like elephant bumping, right? Like there's gonna be giants all around and competing for the same audience, same clicks.
And the good thing is, I do believe that the end user wins, which is truly what I think most of us in the industry really want, is people to have good experiences, to be a part of something special. But that we didn't even get into that part of it too. We had that FTC letter go out to 1,100 companies. I didn't get it, but a lot of people did, and that was like a red alert to the industry, a warning shot. Plus other things that have happened where you look around, and even email deliverability gets challenging, and you're always having to work. So when you look at the landmines along the road that you weren't thinking of, to be part of this huge infrastructure offers you layers of protection and comfort, so you're fighting different battles.
100%.
Because you're right. I think it definitely was it's a harder business now than it was when I got started. Much more competitive, and I feel now that I have unlimited weapons. Like literally, it was like I returned in like Luke Skywalker in Black Cloth with like the Force.
I have that vision now of you in the outfit, and
that's what it felt like.
You got like all the black around you, and like I'm waiting for the lightsaber to pop up.
Can you edit this? Glow comes over.
But it's so I did this thing for our accelerator group a couple meetings back, where I just did like a full 5 forces analysis of FinPub, and kind of showed where like the profits are leaking away, where the risks are. And like, it's a very clear thing that the number one catastrophic risk to the industry comes through our copy, through that aggressive promotional, because it's the regulators, it's angry customers, it's the thing that pisses off the ad platforms and kills traffic. It's what the merchants get offended at. Right, it also actually causes chargebacks, because the copy starts to get disassociated from the product, what the product actually is. And so like that really aggressive, and in many cases not at all compliant copy, it is the biggest threat to an individual business and an industry as a whole. It absolutely is. That's what brought the FTC cases in. It's what got everyone scared, because it's all copy driven. And so because like you're in a different environment now, you have a different, like the industry's mainstreaming, but you guys are absolutely mainstreaming. as part of this deal. Are you seeing the change in the way that you promote, and are you able to then acquire customers at a higher cost because of the value of that customer now, and so you don't have to get quite as aggressive sometimes? Is that really affecting you yet?
So I was never. I have 2 copywriters on my team. I never had a big budget for copy because I was always doing webinars. And so
Right.
I had sacrificed that goes back to the beginning.
Mhm.
I chose in that sense to be smaller, stay on message, tell everyone exactly what they're going to get in the training. Kind of like John Carter, where he
Yeah.
does the trainings. And then if you like it, you could come in. I think John Carter's someone also, and I'm pretty sure he sold. I'm not sure. I think he sold too.
Yeah, he took on investors.
Yeah.
Um,
But he's someone also that was the webinar model that it was education and then selling. And I don't think he ever got to the Agora size level either. But you know, he has the brand recognition. His members, like I've done webinars where we promoted each other, and his audience loves him. And I think my audience loves me. So we keep it smaller. They know what they're getting, and we stay on message. So
mhm.
that hasn't changed. And but
Yeah.
what was nice was you know, for every year I've had lawyers vet everything I do and come back to me with changes I need to make, and to hand that over to someone else and say, tell me whatever you guys want to do. That was my most enjoyable part, was saying I'm off legal. Whatever you want to do, I don't care.
That's awesome. No, I think you're right though. Like the in the education world, there's some really good companies who weren't trying to push it, and I feel like, you know, some of the things that we've done at FMS have probably contributed to an overly aggressive culture, in the sense that we often feature the biggest win like that somebody had, and so you start to emulate what everyone's like, oh, I see how much money this group is making or that group is making, and everyone's kind of push the envelope to get to it, but they don't have, like, you know, and the only thing they don't have the option to do the money, like the $5 million budgets. And I mean, heck, during that crypto boom promo, that James Altucher thing, I think they spent 65 million in 45 days or something ridiculous like that, like on acquisition. Yeah.
I think it's a critical point, and it's something that every individual company has to decide. And I'll just be completely transparent. It happened with you. I always watched some of the companies, and I saw the way things were being marketed. And I'm not claiming to be a saint, but I was always I was not in the gray. I was in the white. And I saw, and I said, wow, if I could say that, of course you know, and I watched kind of with envy as these companies grew, and I couldn't go over that line. And I'm not saying this is a knock. The number one fastest growing company that you guys have featured a lot, that everyone looked at, was Raging Bull for years.
Yep.
And prior to what happened with them, and I know they're on the rebound now and stuff like that, and you know, no one wishes negative on anyone, but Jeff did an interview with you.
Mm-hmm.
And it was one of the most honest interviews, because in that interview, he said, and this is before anything happened, you know, we wanted really big, really fast. And if I could be honest, I wish we stayed smaller because it was easier and there were less problems. And I watched that interview, and I said to my team, you know what? That was as real as anyone's ever been. And I'm listening to them, and I'm going to stay where we are, and we're not going to cross those lines, you know. And I really appreciated that honesty there, because he kind of gave a warning, like, don't reach for the stars. And so I kind of focused on brand.
Mm-hmm.
And if you focus on brand, and sorry, without getting too much, I don't want to go over the book, but like, the problem is, if you have the Agora companies, they have so much money and they have so much staff. It's like a fund, like ARC. Like, the more money you have, the more you have to put in play, the more you have to turn out. There's a pressure to perform. If you're individual companies, like a lot of companies are, you shouldn't have that pressure. And you could kind of perform within your means, stay on brand. And then the way you make more money is through that brand growing. And if you team up with bigger companies to do it, even better, because then you have more things to sell.
Oh, so like 2 things that you said there, that, like, one, I'm so glad that you brought that particular point up, because that to me is the one thing that stood out from that conversation with Jeff was that he's like, if I had to go back, I wouldn't try to be $100 million business again. Like, that was a mistake.
It was very honest.
It was, and like it really stood out because, and it was just something that like I think was the biggest takeaway from that. And then, and I've talked to him since the whole thing played out, you know, several times, and I think he's like, yeah, I'd rather not have an attempt to go back to that kind of a business again. And I've talked to other people who were heads of $200 million companies, and they're like, I don't want to do that anymore. 10 million, 15 million, $20 million businesses. That's a great place to be. I mean, I talked to someone the other day, and he's like, yeah, once I got to $200 million, it seemed like I had a lawsuit a day to deal with. You know, just staff, all that other stuff. And so it's a completely different experience as an entrepreneur. And I totally lost. There's that second thing you said. What was the thing you just said at the end there?
That you're smaller. You don't have to. You could stay within your
right.
Focus on brand and then introduce new products.
The brand issue. So, like, I love that you talked about that, because I feel like in direct response, and this is very much the influence of the Dan Kennedys of the world, branding is shit on, frankly. Like, it's not marketing, it's this and that. But in a world where, like, like you just said, like doing deals with bigger companies, you have a shit brand, or no, you can't do that. Like, you're not even going to get into the conversation. Like, I think of branding just from a joint venture and strategic alliance kind of standpoint, as it's almost the critical thing when it comes to those things in a lot of cases. And like what you said is absolutely right. Like, if you don't have a good brand, like if you do have a good brand, you can go partner with these bigger companies. And then also, like, having a good business, like taking care of your customer and being great at what you're great at, and not feeling the pressure to be something more than that you're not great at, because it could make more money.
And sometimes it's okay to, you know, they always say the way to be successful is surround yourself with people that are smarter than you. And like we named already who's on the board at Tiffin and stuff like that. But you know, TastyWorks is another. I love using them as an example. I'm just a big fan of their company. And again, I watched that story from inception. But they offer free options education, and they have all these people that all they do is talk about trading. But they set up their business so that they're a broker dealer, and it became worth $1 billion, right? You know, my strength, I was never going to set up a broker dealer. I had looked into it early on. There was too many conflicts.
Right.
You know, the Nigerians were the last ones to do that successfully. So to team up with the people who could take care of all that stuff, and me just be me to the best of my ability, the other things take care of itself.
Right.
And that's, you know, I think it's strategic alliances.
Yeah. No, I love that. So I'm going to take it then that you're net positive on the experience of joining up with Tiffin and FA. And
absolutely. Yeah, it's it also wakes you up to because it's new. We do. I've been in this business for a long time, and this has been fresh and new.
Yeah, it gets exciting again.
It is. It's part of a growing company. It's the excitement of a startup with the stability of a company that raised over $400 million.
That's crazy. That's all. So I guess last thing I would end with, like, what would you say to anybody out there who's kind of maybe on the fence about, like, maybe interested in exploring like the idea of kind of exiting right now, and maybe talking to Ian and seeing what their opportunities are? Like, what would be your kind of, you know, takeaway or advice to them?
I think it's, as we both said, this year, the money going around, the M&A happening is unlike anything we've ever seen. So everyone owes it to themselves to listen to that deal, because it might not be there. Like you said, in the future, they might not need you anymore in the future because they'll have gone past that. So I do think that there is a limited window. And as a trader, I was a trader before anything else, you know, the very first thing I did was I put all my money in AOL, and it doubled, and then it went to nothing. And and that's what I learned. Like, you know, where you are is always changing. So if you have a really good opportunity to get paid, you know, a life-changing payment, and be a part of something that can make you even more, how do you not listen?
Yeah, definitely. And obviously, for anyone out there, like, full disclosure, like I agreed to help Adam and Ian and the guys kind of penetrate the space and meet more people and talk to you guys who are interested in possibly exiting. So happy to make any introductions for you if you want them. And dude, Adam, like, this has been an awesome conversation. I really appreciate you taking the time for this, because I love talking to you about this stuff. Like,
no, it's fun, and truly, like, I know what's fun is I know the audience will be listening, a lot of them, and I like their responses to certain things. But like, I told you, I've watched all these, I've learned from these, and if I could give that back and someone watches this and something happens that benefits them, then that's awesome.
Yeah, no, I appreciate it. And this was awesome. So thanks for being here. And I'm sure I'm going to see you at one of our things in the near future.
For sure. For sure. Later, John.
Take care.